Hello. 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 All right. Good day, great folks. We're going to look at what we call income tax tables. This is one of the questions that really great folks find difficult. I'll start by explaining what we use it for. We shall always use it when we are calculating what we call income tax. Income tax can also be represented or replaced by what we call pay as you earn. Anyway, as we calculate taxable income, as we calculate income tax, first and foremost, we need to take note of some items. All right. Item number one, we need to know the person's age. Age will be vital. Then we need to know the person's amount of money that the person gets, which is the income. Then we need to, from these two, we shall be able to start. Then why do we need the age? Age, we shall use it to determine which rebate the person belongs to, all right, or threshold. When you look at threshold, this is the determinant. This is the determinant. What does it determine? It determines whether one will pay tax or not. All right, we shall see as we go on. I'm using some tables down here. These are the thresholds. This, we say, it determines if one pays tax or not. Yes, and but then how shall we tell? Should the annual income of someone equal to this number that you see here? Because now these are different numbers because of different years. But should the income equal to the amount that you see here, the person should not pay tax. Should it be equal or less? The person should not pay tax. Person should not pay tax. So we shall be doing that as an example. As an example, we shall say here. Let's take an example here. A person is 60. A person is 64 years of age. They earn, let's say, 5,500 per month. So we want to know if the person's going. We need to know to determine if they pay tax. First and foremost, the person 64 years of age, keep it aside. How much does he earn? He earns 5,000. So what we're going to do, we shall take the values, we multiply by 12. 5,500 times 12. So the person at the end of the year, person has 66,000. Are we there? Let's take it to be, this year was 20. Let's take to be 2019. The person earns this in 2019. So we shall come here. The person is 64 years of age. So when we come to the table, we shall see we are here, 64 years of age. So the person is here. So I'm here looking at that number. I'm here looking at the number because the person here is, the person got 66,000. So this number is below the threshold. The person does not pay tax. How do you prove that? We come now, ask ourselves. We shall ask ourselves, which bracket does the person belong to? Which bracket does the person belong to? We shall go. Let's find out now. When I talk of which bracket, I'm looking at this table here. So definitely the person belongs to bracket number 1. Are we there? So we shall say 18% times 66,000. So the person has this much. Then we subtract the rebate. Remember, is 64 years of age. The rebate is now here, 2019. The rebate is 14,000. 14,000. 14,069 rands. I'm saying this, you will have a negative number. Person have a negative number, which is 2,187. Negative. So person does not pay tax. Does not pay tax. That's how we say it. Okay. And I think we need to know, when we look at these tables, we've seen the rebate. A rebate, this is what? A tax relief given by the government. Tax relief. What does it do? It reduces on the tax one would have paid. It reduces on the tax one would have paid. Tax rebates and medical tax credits, those they reduce on the tax one would have paid. When we are calculating threshold, we use just to determine will the person pay tax or not. Are we there? That is it. So rebates, these are given, or it's a relief given by the government to taxpayers, and we subtract it from all the tax that a person has to pay. Together, subtracted. Another thing you have to take note of: primary is for all the people. Primary, everyone qualifies for primary. But then, if the person exceeds, if the person is 65 to 74, that means you subtract 2 values. If the person is beyond that, for example, 75 and older, you subtract all the 3 values. We shall see on as we go on. All right. And I think we'd like us to look at, I'm trying to interpret this table a little bit. We have these values here, these values. These are the maximum annual tax paid from the previous, whereas it's the minimum in the current bracket. Maximum from the previous, minimum in the current bracket. But then how do we get them, or how are they determined? For example, how was 67,144? This comes from bracket number 2. So it's maximum in bracket number 2, minimum in bracket number 3. But then how was it go? So since it comes from bracket number 2, you will say, you will come here to bracket number 2, 37,062 rands plus 0.26. The 0.26, I took this, I divided it by 100. I get a point like that into brackets. Now, into brackets, I'll take the maximum number here, which is this. I'll write it here. Then 600 minus the number I found here. So when you put this in your calculator, straight away, please, you put everything. You put everything. You will end up having the same number as we see it in bracket 3. So it comes from bracket number 2 to come to bracket number 3. Take note of that. All right. You can also try another one. All right, we come back to this and we say, how was this one determined, the one in bracket number 2? It's the maximum in bracket number 1 and it's the minimum in bracket number 2. Anyway, we shall say this value here comes from bracket number 1, but which will be so simple, 18%, which is 0.18 times the maximum number here. One would ask, why aren't we subtracting? We are not subtracting because it's this equation is different from these other ones. These ones have taxable income above, but this one just has taxable income. So we do that, 18 times 205,900. We end up having the answers 37,062. Look at that. That's how we get these values. Let's try this, the last one. So this bracket comes from bracket number 4. Comes from bracket number 4. So we shall say 105,429 plus 0.36 into bracket, the maximum number that you see here. Which is this number here. All right, that's how we do it, and that's how we use the, okay, that's how we determine the values that we have here. Let's look at this scenario here. As I told you, the scenario will always provide you with the age and the salary the person gets, or an income the person gets. It has, before you do calculation, the amount has to be annual. All right, let's look at this. Explain what the tax threshold for 65 years and younger means to taxpayer. Remember we said this will be used to determine, it's used to determine if one pays tax or not. Either. That's what we use. We use the threshold to determine whether one will pay tax or not. Now here they're asking us, we need to calculate annual taxable income. Annual taxable income. Let's come here. When we look at taxable income, taxable income will always be the gross someone gets. I'm talking of the gross income. This is the total income that you earn minus the non-taxable income. They are called tax deductibles. All right. Non-taxable income. And this will include your pension. If one pays pension, we subtract it from the gross. Then if one pays road accident fund, we also subtract it. Then we also subtract of what we call, if someone pays donations, someone donate, the donation you pay to a certain charity, we subtract it off before we start what? Calculating the taxable income. All right. Well, simply meaning for you to start calculating tax, the money has to be taxable. Are there? The money has to be taxable. Take an example, simple explanation here. Someone gets that much money, we call it a salary, but part of it is not taxed. So this is what we call the non-taxable income. No tax comes from it. No tax is deducted from it. No tax is deducted from it. So let's go to the question that we had here. Mrs. Inlove, who is 85 years of age, or 58. Mrs. Inlove, who is 85 years old, earns a monthly income of 60,000 each month. She contributes the following from her monthly income. She contributes medical aid for herself, her husband, and two children. Then 75% of her basic income, which is contributed to pension. The 1% basic, 1% of her basic income is contributed to UIF. Maximum, UIF is always 1% of someone's income, but it cannot exceed a certain amount. Now, for example, here it was 148. So you cannot exceed, even though, because 1% of this would be around 600. 1% would be around 600, but the person only qualifies for person only qualifies for 148 rand 72 cents because it's a maximum UIF. Anyway, let's calculate the tax. Oh, sorry. First and foremost, we need to look for the taxable income. So we say, remember, we say taxable income will equal to the gross minus pension. Because I'm seeing here this as pension, no medical aid. So here it will be gross minus pension. Okay, let's do that. And you see, remember they said annual, so we shall multiply the answer by 12. Okay, now first and foremost, the gross we say is told you 60,000. Since we are looking for pension, so we shall come and subtract minus 7.5% of the basic income multiply everything by 12. You end up having 666,000. So this is the taxable income. Okay, so yeah, they say determine Mrs. Ntov's annual medical aid tax credits. I will always write them as MTC. MTC, sorry. MTC. So this one will depend on the number of dependents. We saw she pays medical aid for herself, that's one, for the husband, two, and two children. So the family has 4 people that are on medical aid. So we shall go and check on the table where medical aid is. Let's go there and you see. Medical tax credits are like this. Yeah? So there are 4 people. Simply meaning the main member, who is Mrs. Ndlovu. Mrs. Ndlovu, she will take the same amount. Also, the first dependent will take another amount. Each additional member will take 215. So here, allow me to do this. This will be this much. Those 2 people will share the same amount, plus the other 2 are remaining. Everything has to be multiplied by 12 because it's annual. Which is 12,816. We come back here. See, we say it was 2 times 319 plus 2 times 215. Everything became 12,000. Sorry, multiplied by 12 because we are looking for annual. Became 12,816. This is medical. Also, this one will act, it's added onto the rebate. You understand? It's a relief for those who pay medical, for those who pay medical aid. Mrs. Ndlovu stated that her monthly tax contribution, take note of that. She's looking at monthly. Yet for us, the values we're dealing with are annual, simply meaning you look for the annual tax paid divided by 12. All right? Then we shall say the person says the monthly tax contribution is 9,111 rand 75 cents. Verify showing all calculations. Now, we need to know. First and foremost, we know the taxable income. But which bracket does it belong to? Which bracket does it belong to? We shall come to the tables here. 666,000. It's in bracket number 1, 2, 3, 4. It's in bracket number 5. So we shall say we shall take this. The moment you identify where it belongs, which is this bracket here, you write this number here down, plus 0.39 into brackets. Now you bring the taxable income that you've just got, which was this much, minus the number which is already inside the bracket. Calculate everything, put it in a calculator. Comes 18,000. Sorry, becomes 187,407. Now here, this is when you subtract the rebate and you subtract the medical tax credit. So it's that much minus. Now, the person was 58 years of age. So the rebate which year are we using? Let's use 2021. So the person qualifies for 14,958 minus the tax credits that we've just seen. Subtract everything. You have 15,000, sorry, 159,633. Because this said the monthly, we shall divide it by 12. So her claim is what? Invalid. Thank you very much.